we all knew there's a debt super cycle. We knew
Mm-hmm.
there's problems with the financial system. And we all kind of thought the next recession, which was the one we've just had, was going to be a doozy. And we'd probably end up having to continue to see the ongoing mess that we saw in 2008. What happened was actually the reverse. We saw the largest ever recession outside of 1929, 1930. The markets barely paused, rocketed upwards, and basically shook it all off. The governments papered over all insolvency issues and have basically pushed them forward. So many people, will come off government support at some point, and they still have accrued debts to pay. So we've got some payback to come. Many companies were given a lifeline, so many companies didn't go bust in the equation, the natural clearing didn't occur. So we've created yet more debt, and the equity market is now reflecting something else. And I struggled with that because this was never something I foresaw. I could see the insolvencies, I could see the government trying to help it. I've seen the change in monetary policy blending into fiscal policy, where basically the central banks will backstop as much fiscal stimulus as you want. What I did is I went back recently and thought, am I thinking about this wrong? Because I understand this crypto world as well now. And I understand the crypto world is all about offsetting the debasement of fiat money. Maybe I'm looking at the markets in the wrong way. So I went back and changed the denominator for the S&P and just changed it to the Fed balance sheet. And when you divide the S&P by the Fed balance sheet, you get something that intuitively feels more real, which is that after 2008, the markets have traded sideways in a kind of up and down cyclical pattern since then. So then I looked at it against all asset prices, and it basically told roughly the same story, is that it is maybe the value of the dollar or fiat currency overall that has declined, that has made it look like the asset prices increased. The only one that showed any difference, two assets, one was the NASDAQ. That because I think there is a secular trend in technology, and there is an overvaluation, but even the overvaluation can be accounted for by the monetary stimulus aspect. So you're kind of neutralizing that. The NASDAQ kind of made sense. And the other one was Bitcoin, which made sense because its job was invented for this. And it's going through Metcalfe's law network adoption phase. So we're seeing exponential logarithmic growth as opposed to linear growth. When I look at it that way, it kind of makes sense. And then what I found is, because you and I will look at the equity market, we think this looks nuts. But then when I look at the equity market versus gold, which is another denominator, it looks pretty normal. Or the equity market versus oil, or all of these assets that have this relative valuation, it doesn't look like the equity market's crazy. It's expensive for sure, but not as crazy as it looks in dollar terms. So I'm just trying to think this thing through as maybe I'm thinking the whole thing wrong. What this whole digital asset space is basically is VC with real-time mark-to-market, right? Which is terrifying. Nobody wants to see that because, the number of times the project's going to go to zero. No, it's not. It's going to be amazing. It's going to zero before it eventually gets traction and builds its business model. We're seeing these in real time. All the mistakes and everything all happen in the open and in public. So it's quite hard to invest in because you don't know what's going to zero and what's not. So you kind of need a bit of help within that. But you can build baskets of stuff. You can do it yourself. You don't need to have somebody to do it. There are people who are now building indices, which I think is a nice, lazy way of doing it. The top 10 by market cap or top 20 by market cap, and they automatically adjust what's in it. And that's worked pretty well for most equity indices. So I think that's fine too. But I also think that really as entrepreneurs, the opportunities for all of us are huge. I mean, staggering. And I think that's what is going to make the most money of all. Yes, buying and owning digital assets, and I'm fully invested in Bitcoin, Ethereum, and a bunch of others. But really, I understand that the change, the disruption that's going to happen to business coming from all of this, people are still so far behind the narrative. They're still talking about should we buy Bitcoin or not, when the reality is the world is moving so fast that everybody from musicians to artists to lawyers to accounting firms to everybody is moving to blockchain. The gaming industry is leading it. In the video industry, it was all led by porn. They've been left behind in this industry. It's actually the gaming industry is absolutely streaking ahead of everybody here. What is being disrupted here is every single component of that, from finance to ownership to insurance to supply chains to the whole lot, where it's all been centralized in the past and now it doesn't need to be.
Who are the biggest? It feels like right out of the gates, it feels like the biggest winner is Ethereum. Who are the winners here?
Yeah, the big winners is this whole digital asset ecosystem, right? So currently it's a $1.7 trillion asset class overall, taking everything into account. The equity universe, the fixed income universe, the credit universe, they're all in the $300 to $500 trillion range. So we've got the birth of an asset class, which is disrupting all of those, because bonds and equities and custody and all of that is going onto the blockchain. So all of that is going to be disrupted. So we can imagine the ecosystem grows to at least the 300 trillion. So that's a 200x from here, which is the nature of exponential growth and Metcalfe's law, adoption effects. So that's what we've got in front of us. And it's basically going to eat money and anything to do with value. So, Mark Andreessen's Software is Eating the World was incredibly profound, and it's becoming more profound by the day, because the magnitude of what is happening now dwarfs almost everything that's just gone before it. So it dwarfs the move to the internet, the internet 2.0. It's much larger, because even things like houses are going onto the blockchain. They're going to be tokenized. So here I am in the Cayman Islands. We've got the rich-poor divide, as everywhere else has. It's not as bad as many places, but we've got a bunch of real estate on 7 Mile Beach, which trades at $10 million for a condo. Normal people can't afford it. So the rich who own these things and build these things make more money than the others. But when you tokenize real estate, you're going to be able to sell it to the local pension plans. And everybody can participate in high-end real estate or high-end cars or high-end art. It's really democratization of ownership of assets. Right now, the average millennial, let's say, who's at 32 years old coming into peak earnings, can only own a certain amount of S&P or equity or fixed income, and they're not going to make enough returns because of the valuations and what they can buy. Houses are expensive. But here you're buying an asset class that can potentially go up 200x over the next 10, 20 years. And you can own small fractions of it, so everybody can own the same assets, which is groundbreaking. I think the world where students end up with debt is going to be reversed, and students are going to end up with equity. So if you're a student at Harvard and you've got top grades and you look like you're going to get placed into good jobs and have a good career, you will be able to tokenize part of your future earnings, which is fascinating because that pays for your whole education. The other thing that comes into play within all of this is you will be able to monetize your attention span, which is part of the disruption of the business model of Google and Facebook that is yet to come.